Hey everyone, welcome back. This is my next episode of Behind the Key. I'm Adam Sellars with the Queen City Sellers team. And y'all, I brought a really exciting guest in today because we get to talk about the most important thing in real estate, which is mortgages. I have Adam Kelly here with Movement Mortgage, one of my best friends, y'all. And I'm really excited today to talk a little bit about some of the mortgage myth understandings, help everyone really drive in with like what the war's doing, what oil's doing, why are rates like they are, explain some myth understandings for you and really help you understand when the right time to buy a home is. Because we all like to hear every realtor say the right time to buy a home is now. And so let's bring in Adam. Adam Kelly, give them a little bit more about you and how they can connect with you.
Adam Kelly, Movement Mortgage. Really the best way to reach out to me is really just a quick phone call or text message. Adam will have my information on the link on the video. So please don't hesitate to reach out, even if you have the most basic questions, happy to answer.
Yeah, because ultimately, Adam, one of the things that we like to try to solve and tell people is a lot of people do it backwards in real estate. Everyone always seems to want to come to me first, when in the real thing that we want to solve today is where really should they be coming first?
Absolutely. It is awesome when clients actually come to me first and say, hey, I'm ready to buy a house, but I want to figure out the numbers first. Because that is not typically how it works out, right?
Yeah, it's usually the backwards thing.
Yeah, they go on Zillow. They're like, "Oh, I want to buy a house." They call you. They're like, "Adam, I'm ready to go look at it. Let's put in an offer." And your first question is,
my first question is, "Are you pre-approved?"
Yeah,
and they go,
"How are you buying it? What do you have cash?
Yeah.
Do you have their financing set up?" And then it comes into a rush over the weekend to try to figure that out.
Yeah, so let's solve some of that. Everyone's been talking about rates. But what most people don't really understand them. I mean, we always think we know. We always heard oil prices or inflation always drive rates. What are we missing when we talk about what a rate really is?
Yeah, and people will call and say, "Hey, what's your rate today?" Like, I can't answer that question. That's a very loaded question. Rates depend on the individual situation, credit scores, down payment, loan programs, where you're looking to buy. So it is a difficult question to just say, hey, what's your rate today? Because you don't know. It changes day to day. It changes from person to person in the situation. And so until we go through the numbers and try to figure out where you are financially and what your goals are. And at that point, we can give you where rates are.
Yeah. So don't start with rates, start with education. So if we're understanding a little bit, speaking of education, who is Adam Kelly and like, what do you do as a lender? As a lender, everyone hears lending and lenders and, how do we define that?
Yeah. So, I mean, my goal as a loan officer is to meet your goal. Your goal is to buy a house within your means, hopefully, right? You have a budget in your head, and you want to pay a certain amount of money per month, and that's what you can afford. And it's my goal to put you in a position where when you go to look to buy houses, we're doing that.
Yeah. And so how'd you get into lending? Like, what made you become an MLO? I know you pretty much came straight out of college into this industry, didn't you?
Yeah, I kind of fell into it after college, actually on the collections side of the mortgage business. So, where you don't want to end up. And I think that's honestly what's made me better at my job is, I started on the collection side of things, going through people's finances, trying to help them get out of being in collections, being in that debt side of things, being in a place that you don't want to be, and trying to work through these situations and getting them back out to being in a positive position. So my lens that I, initially got into the origination side on the front end was, hey, let's make sure these people understand their budget, understand what their monthly obligations are to make sure that they're not going to be house poor and end up in a collection side or getting foreclosed on and getting behind on themselves.
Yeah, because one of the things we've really taken a pride in and working together is making sure that we're getting people into the houses they've been in. So far, we've been pretty good with that.
Yeah.
But, so you've seen markets. I mean, you've seen them all, like from 2008 to this new market. I mean, how do you stay in the market and stay relevant right now with, I mean, I think 2008 was a shift. We've seen micro shifts more than we've probably ever seen in the industry in the history of the industry. You know, what's made you stick with it? Like, how have you stuck with it?
Yeah, I mean, I got into it in 2010, so it was right after, the 2008 crash, and that's might have been collections were so high at that moment, and made me learn a lot. So I've been in and out of some good markets, some bad markets. Obviously, COVID was crazy coming out of the past couple of years, higher interest rates, and just being able to help people still meet their goals and getting into a home and making it financially feasible for them.
Yeah, and it's like everyone says, there's a ton of lenders, or I know a lender. You can meet people, and like everyone tells me, there's 17,000 realtors in Charlotte. I'm sure there's the equivalent side of lending. What separates a good lender from a great one? Like, what do people need to see from a lender right away that tells them I might have the right person I need to work with?
Yeah, it's honestly being a person and not a number is a lot of it. Like, I want to make sure that anybody that I work with gets the understanding and knowledge and feels comfortable with the decision they're making. And if I issue a pre-approval for somebody, they're going to get to the closing table.
Yeah,
because
I experienced that.
Because I mean, it's my name on the line, right? Like,
right.
you go to a Quicken or a Wells Fargo where you're just a number, and people are like, oh yeah, I just want to work with my bank. Okay, well, a lot of times they come right back.
Buckle up.
Yeah. Because, if you're filling out an application and not giving any kind of documents, and somebody's giving you a pre-approval, what makes you confident that thing's going to close when they've verified nothing? And that's a lot of the difference between, the bigger banks or the Quickens, the online lenders. They're real quick to give you a letter, but that letter doesn't mean anything. And just being, it's my name on the line. It's my name on the letter. I'm local. I'm around town. When somebody sees that, I want them to think like, oh, this thing's getting to the closing table. Yeah. And that also helps you out on your end of things, getting your deals accepted, getting your offers accepted.
Yeah, because when we submit offers, we're knowing that people understand who we are and what we've been through. They're not necessarily just another name on a sheet of paper. People are seeing us around town and meeting up with us, but also knowing we're bringing a good product. So, like, you mentioned a good thing or a funny thing too for me that I kind of want to dive a little bit deeper into is that pre-approval versus what do they call it? A pre-approval versus a pre-qualification. Because some people, I think, have a big misunderstanding around it. What's the biggest difference between pre-approval and pre-qualification, and why does it matter before you go look at homes?
Yeah, and different lenders will call pre-approval, pre-qualification maybe the same thing for some of them.
Right.
But really the big difference is on the pre-approval side, we're gathering documentations, pay stubs, W-2s. If you're self-employed, we're looking at tax returns. If you have rental properties, we're kind of going through those tax returns, making sure that the income that you put on the application is supported by documentation. And that's what the underwriter is going to do once you go under contract on a property.
Right.
The pre-qualification is pretty much whatever you state on the application. I have great credit. I have great income. All right, here's your letter. Yeah. It means nothing.
So they're much more riskier to go into a transaction with a pre-qualification over a pre-approval.
Yeah, absolutely. And honestly, I do not give out pre-qualifications.
Okay.
Just for that reason, like I want my offers to stick. I want the deals, the pre-approvals that I'm giving out to get to the closing table. So any application I'm getting documentation, pay stubs, W-2s, just to make sure that when they go under contract, they're going to be getting to the closing table and nothing's falling through.
Yeah, and that kind of leads me into another question that, I'll throw at you that kind of is a part of that process. It feels just so freaking invasive. I always had a fear when I went through the loan application process. It wasn't a fear. It was just like, they know where I went to Taco Bell last night.
Yeah.
Or they know how good I am with my money or how bad I am with what I'm buying or spending. Like, what is that for you? And how do you make someone feel more comfortable in that part of the process? Because it feels like I'm giving you like the FBI level information of like a tax. It's worse than a tax audit. Sometimes it feels like.
Yeah. I mean, it is. And like, I'm not here to judge.
Yeah.
How,
what's on there.
What's on there.
Yeah.
I'm just here to look at it and make sure I'm structuring it to meet your goals, which is to buy a house.
Good. So you're not going to insult me if you see my OnlyFans subscription on there.
No.
Good news. All right. Perfect.
But yeah, and that kind of want to touch on another thing when it comes to that. Like when you're going through the process, don't try to hide anything.
That's a good point.
Because like you said, you're providing everything. We're going to find it. Like be honest on the front end, and that'll help eliminate any kind of difficulties down the road.
What can not being honest do to you?
Yeah. I mean, so if you're leaving something out, if you know that you have a debt that you're paying on a monthly basis that might not show up on your credit report, we're going to see that when we get to your bank statements. And if it's something that for some reason you kept from us during the pre-approval process, and it shows up, then that could kill a deal.
Shoot. So you got to be honest. So some of the things that I'm catching are, it's okay to be uncomfortable, but just having honesty around your application process. Because like we're going to see uncomfortable things, but we really don't care.
Absolutely.
We see it all the time. Whatever.
Yeah, I'm not here to judge anybody. You can make $1 million, or you can be making $30,000. I don't care. I'm just here to structure the loan, make sure it fits within your budget, and meet your goals of buying a house.
Yeah, because I've heard some of my clients say that. A recent client was like, well, it feels really weird to talk about or give them all this stuff. And I have to kind of explain it because I've finally been through it of like, yeah, it feels a little invasive, but things are there for a reason and they're all to protect you, and kind of had to reiterate that. So good point to point out there and have a discussion about.
But we are giving you like $500,000. So
yeah, just a little bit of money.
We want to make sure that you're there and have the ability to repay that money.
Yeah,
we don't want you going into foreclosure or getting in a position you don't want to be. So, it is definitely intrusive, I guess.
Yeah,
you could say, but for good reason.
Yeah, absolutely. All right, so we talked a little bit about uncomfortability and the process of starting a loan application and the middle parts and the pre-quals versus a pre-approval, and really driven into some of the good things about you and Movement Mortgage and the difference makers between big banks and smaller things, and you guys handling loans. Let's talk rates, because obviously this is a big deal right now. We all thought coming into January it would be these great rates and things would shift, and then we slapped a war in the middle of the spring market.
Yeah.
What's actually happening with rates right now? No headlines, no clicks. Like, what's going on?
Yeah, honestly, don't look at headlines when it comes to interest rates, because typically they're about a week behind
more, right?
What's actually happening?
Yeah,
and the media is going to tell you one line, but when people have questions about rates, they're like, "Oh, I saw rates went down." I'm like, "Yeah, they did a couple days ago, but they're back up now." So it really is like they're running behind schedule when it comes to that. And as far as interest rates for the year, it's been very volatile. We thought we were getting in a good position. The Iran war started. Oil prices went up. That's going to trickle down into markets being inflationary because oil is the fuel that transports goods across the world, across the United States. So the fear of those additional costs trickling down into everyday goods is inflationary, and interest rates typically move with inflation. So if we see inflation that going up, rates are going to come up. But hopefully throughout the rest of the year, this will kind of dissolve itself in the near future, and we'll see inflation kind of coming down a little bit, and therefore rates coming down.
Yeah, I always feel like the media grabs onto the rate reduction through the Fed, but is it true that that's kind of what drives the next phase of pricing of interest rates, or is it really that's already happened and you guys are smart enough to kind of predict what they're going to do and you already know where it's going to go?
Yeah, so Fed rates are for short-term rates, your credit cards, car loans, anything like that. And so when the Fed lowers rates, the market has already kind of baked in what they think the Fed's going to do. And so, if they're predicting the Fed to lower the rate, that shows that they think inflation is coming down. So the market will move kind of ahead of that. And then so yes, when you see headlines of, the Fed's cutting rates, yeah, we get a bunch of phone calls the next day saying, I heard interest rates are down. And that's, we have to go through that scenario and kind of explain why that's not necessarily the case.
So where do you see them going over the next 6 to 12 months? Stay flat, up, down, all over the place?
Yeah, that's a great question. And if I had the answer to that, I would probably
be really rich,
sitting in this chair right now,
right?
Sitting on a beach. But I mean, it all depends on the war. I think.
Yeah.
What kind of transpires with that? If they see that's going to be continuing, then I don't know that rates are necessarily going to be coming down that much in the next 12 months. But if that dissolves itself and, these kind of fears of inflation across the board kind of fall a little bit, then I think we will see rates come down. At the beginning of the year, I thought, we'd be mid 5, something like that by year end. I'm hoping to see them back to high 5s in my opinion, because
nice.
I think that's really a comfortable spot for the market. I'm
anxious for that though, because we see high 5s. We're going to see purchase prices flying through the roof again, because I think our inventory is still a little bit low. And I've kind of seen that over the past few weeks.
Yeah.
We're out this past week, really. It's weird. We go from week to week almost with the market. It feels like when even the rates don't change, it seems like people are finally coming out for the spring market. But.
Yeah. But I mean, honestly, right now, I think is a great time to capture that. Inventories at a decent level.
Yeah.
The buyer pool is not like super hungry. So your options are out there. And if you can, I'm sure you can talk on this, but the majority of the contracts I'm seeing are having some kind of seller concession or not a little lower than
list price.
Than list price.
Yeah.
So I mean, if you can get some seller concessions and maybe at or below list price, then you still might be able to get that interest rate in the 5 with that seller concessions and the purchase price you want.
Yeah, and I think that's an interesting kind of thing, with the seller concessions and helping out with folks. Are buyers smart to wait, or is that a big mistake? Because I do remember, and I think it was, and you can maybe correct me if I'm wrong, but I think it was 2023. We were at 8% coming into the spring market.
Yeah.
And it was a way higher purchase price market at that point.
Yeah.
And way more competitive, and people were mad as heck about the 8%. But I think it stayed for a solid 2 or 3 months.
Yeah. End of 2023 was when rates really peaked, October, November, December. And yeah, to your point, at that point, people were still out hungry to buy houses. And, obviously rates are down drastically from then.
Yeah, almost 2%.
But yeah, the lower rates go, the more, because I'm sure you hear it all the time. I'm waiting for rates to get lower,
Yeah.
And that,
I mean, it would help, obviously, but it's not going to go away, I don't think.
yeah. And of course, when that does happen,
competition's going to show back up.
Competition's going to show up, and then you're not going to be getting any concessions. A lot of those will go away.
Yeah.
The list price to sale price is probably going to be a little higher as far as the percentage there. So, I think now is a good opportunity. Like, obviously, you ask a real estate agent, when's the best time to buy? They're always going to say now. But, given, the position where the market is and the options that buyers have now, like, they can be picky. They have a lot more leverage when it comes to negotiating, because I think sellers are obviously, majority of them are moving on to something else, right? And they want to unload that property. They don't want it sitting for 6 months. So I think they're willing to give up a little bit on the sales side to get in something.
Yeah. And so what's the biggest, as you process loans right now, what's the biggest misconception you're seeing buyers have today?
Well, I think a lot of them think they just can't get approved or can't do
afford it.
Can't afford it. Can't do it for whatever reason.
Yeah.
They think they're having to come to the table with too much money, or interest rates are high, so they can't afford it. But when I talk to everybody, I'm like, one of my starting conversations is, what are you comfortable paying on a monthly basis? And we back that into what that looks like as far as a purchase price.
Yeah.
And that's if you have a bunch of money to put down or you have nothing to put down. So what are you comfortable paying on a monthly basis? How much money do you have to put down? If nothing, there's still several options out there for down payment assistance.
Right.
USDA programs, VA programs that finance 100%. So we're figuring out what they want to pay. We're figuring out, that they need down payment assistance, so they don't have any money saved. That's fine.
Yeah.
We'll get you the down payment. You'll get some concessions on the closing side.
At least we know what to go at the table with, right?
Yeah.
So we know what to bring to the offers.
And so you're coming to the table with very little,
Yeah.
and it's attainable. And I just think the majority of, especially first-time home buyers out there right now, are just they don't see that, they don't feel it. They just need to have a conversation.
Yeah. Would you agree or disagree that you could probably bring less to a table right now than you could have in the past 3 years to buy a house?
Yeah, absolutely.
So that's what buyers are missing, is that you can bring less than you've ever had to bring and still buy a home that's affordable in Charlotte. So we're talking under 400,000, and you're bringing less than you've ever had to bring before to buy it. Mm-hmm. I mean, that's a great point, and I think that's something that I hope, as we, people listen to this video, you think about that as a first-time home buyer. In 4 years, this has been the best opportunity to buy a home for the least amount of money.
Yeah.
Wonder why that is, but I love that. It makes it easy. All right, so we talked a little bit about market reality. We brought maybe some buyers out of the woodworks that have realized it might be more affordable than they've ever thought, and there are a lot of people that probably should get up off the bench and kind of get into this market. Let's talk a little bit about strategy behind the market so that we can move them into the market now that we've got them thinking about maybe buying a home. If I'm a buyer today, what's the smartest move I can make first?
Honestly, the first move you should absolutely make is work through the numbers, right?
Yeah.
Talk to a loan officer, figure out where your financial position is, where you want to be, like we said, what you're comfortable with on a monthly basis. Get everything lined up so that where you're going to land when going to look at properties.
Yeah. Do you think that a lot of people think that they have to be perfect in order to have the conversation first?
Yeah, absolutely.
Do you think that's a big misunderstanding? Because isn't it okay to kind of figure it out and then create a goal around that first versus coming in and just being like, I'm ready, give me my letter, I can move now.
And I absolutely love when, people come to me and like, Adam, tell me what I need to do. This is where I'm at. This is what I have saved. This is how much money I make. This is how much money I want to pay on a monthly basis. This is how much I'm paying in rent right now. This is how much I'm comfortable paying in rent. Cause sometimes, that's a little different. Somebody especially right now, I feel like rentals, rent rates are a little down at the moment, compared to maybe 3 years ago when rates are skyrocketing, or rent rates are kind of moving up a lot.
Yeah.
There might be, as a first-time home buyer, you don't have a lot of money put down. The mortgage payment might be a little bit more than what you're paying in rent. But I'm working with somebody right now that realizes that. And she's buying a place similar to hers right now. Her mortgage payment's going to be a little more than what she's paying in rent, but she realizes that buying that house is locking in the payment, right?
Right.
Where you're having a fixed payment over 30 years. It's not moving up. Yeah, your taxes or insurance will change a little bit, but that's, that's negligent.
It's not like someone's just going to jump in and say, hey, I want $300 more a month. You got to pay it.
But that person's afraid of their landlord saying, hey, we're gonna raise rent by $300 this month.
Yeah.
And then they're probably going to do that next year.
Right.
And the next year until
you leave.
Yeah.
Yeah.
And so she was like, yeah, I mean, I get it. It makes sense. I'm willing to, try to make it work right now.
Yeah.
And we're kind of working through getting her ready to do that.
Yeah. And I think that's an important thing to think of is that, and it's also the long-term wealth behind that. I mean, we talked about it with Gary Keller, and I have a cool little slide I'll add to the bottom of this podcast, which shows the actual growth in real estate. And in 40 years, we've never had a time where a full calendar year where real estate went into a negative, where you lost money. But you had to sell in that market too. So the interesting thing about that is, and he talked a lot about it the other week when I was on a podcast with Gary, and watching it with him, was you only have to sell in the market when you need the money. Like if you're investing in it like this and you're continuing to do it and you're giving it back to yourself, the only time that you're going to realize the capital is when you have to get rid of it. And so holding on to it and continuing to do what you do and paying a flat rate is definitely way more sensible. So like when buyers come into this market, what are some loan strategies that maybe they aren't thinking of that are potential options for someone to utilize that are different or maybe aren't as frequently heard of?
Yeah. I mean, right now, I think there's a lot of people that feel kind of stuck in that 3% rate, right?
Yeah.
They don't want to move because of that. And then when they do decide to kind of transition and try to find a new house, they're wanting to be able to sell and buy at the same time and utilize some of that equity. So there's a lot of different programs that we have to allow them to do that and try to get them qualified, purchasing the new property without necessarily selling the old one. Because I think, a lot of people are afraid of doing a contingent sale right now just because things are sitting just a little bit longer.
Yeah.
I don't know what days on market are right now, but I would say they're a little higher than where they were, a year or two ago.
Yeah. Pricing is important. Definitely. I think the stat I looked up the other day that was a really cool one was if you price it right, it's 12 days on market. If you price it wrong and you do a price reduction, you wind up in the price reduction market, it's 120 days.
Oh, wow. Yeah.
So it's a big difference in how you can, but pricing is everything too.
Yeah.
But
So
that's where the cautiousness comes in because you all can think that you're in the right place. And then you find out you're in the 120-day market.
Yeah.
Even though the velocity and all the rates and all the things you've calculated think your purchase price is perfect and it's just missed.
Yeah, so being able to talk through on the front end, kind of that strategy of, the scenarios of, if you sell it, you're pulling all those proceeds and dumping it into the new one. But if it doesn't happen and you go under contract on the new property, your property is sitting a little longer, you go into that 100-day type market, you can't necessarily push off the buy for 100 days. That's not going to work.
Right.
So just having some options to work through that with people that have a bunch of equity into their property and wanting to move it into the new one.
Nice. So what you're saying is sellers have options if they're in that 3%, 2.25%, that great COVID rate, but potentially want to buy something else, but necessarily all their equity is locked up in the home. There are ways that you can have strategies to list your home later and still buy the next home without necessarily losing and paying 2 mortgages.
Absolutely.
Cool. That's a great option. I wonder if a lot of people have thought of that. So 2-1 buy downs. I've heard a lot of those for a while now. ARMs. We haven't really heard a lot about ARMs in a while. I'm actually kind of blind to those a little bit. Seller concessions. What makes sense right now?
Yeah. So honestly, I'm not a huge fan of the temporary buy downs. I think, those got popular after COVID where people were really just trying to be able to lower their rate, but it's on a temporary basis, a two-year basis, 1-year basis. And I think that's really just a Band-Aid for affordability.
Yeah.
And have we done them? Yes. But I just don't think it's a good strategy when it comes to getting people into a home that they can afford. You don't want them to afford that 2% lower rate and then, us thinking that rates are going to be down and they'll be able to refinance out of that. Because especially like right now, like if we would have done it a year ago and then thinking, rates are going to get lower, but they're not. So I I'm very cautious when talking to people about those. It's really like, I think it really is kind of like a Band-Aid for affordability for some people. And I just don't think that's a good strategy long-term. And that might be a little bit of my conservativeness coming from, that collection side of things. Like, I don't want people I work with to end up in a bad situation and not be able to afford it. So like, I want, if they understand that they can afford it at that higher rate, that's fine. But I think the majority of the people like that get into those situations are like, oh, I'll be able to refinance out of it. And, we've seen like over the past couple years, like, so we started doing those toward the end of COVID, and they haven't gotten better. And then those people's interest rates are now 2% higher than where they started. And that payment's
$200, $300, $400
$800 more than where it started. And then that's no longer comfortable for them.
Yeah, and one of the gotchas I ran into is a guy did a refi before he sold it, and he had to sell for a relo, and the 2-1 buy down had a lien, so they actually had to pay some of the money back. So he got caught big time on that one. He actually wound up having to give him like $3,500 on the additional funds back that they had given him for the buy down.
Interesting.
To like partner with it, so he got caught on that, and then it was this last closing I had. I was like, oh. Wow. But yeah, so there's also some gotchas, I guess, behind those 2-1s as well, if you're not reading the fine print to make sure they're understood.
And I mean, ARMs, we're starting to see a couple of those come back. I mean, they were priced not so great.
They haven't been used in years, right?
Yeah. I mean, you don't really, a majority of the time, if you're looking at an ARM versus a fixed rate and you're only getting maybe an eighth difference in rate, it probably doesn't make sense to do the ARM until that spread is a little greater.
Yeah, but you can run the math on that and help them understand.
Absolutely.
The arms.
I mean, we'll lay all the options out there, and obviously, I'm gonna tell them what my opinion is, or but it's up to them, whatever they feel comfortable with. It's their money on the line.
Yes, yeah, it definitely is. So how do you help a buyer win in a competitive situation from a financing standpoint? What are your tools that you give the buyer that maybe helps them that someone else might not give?
Yeah, so like I always encourage, once we go through the pre-approval process, kind of run the numbers, figure out where they want to be. I'm not just like, yo, here's a letter, like call me back whenever you get under contract, right? I want to kind of be involved in the conversations and the offers. Yeah. Because two things, I want to make sure they're comfortable with what they're getting into. Your payments are going to change a little bit depending on taxes, insurance, HOA, and I want to make sure that the taxes, insurance, and HOA aren't drastically different than what we had initially on the pre-approval stage. And again, as far as rates, they change daily. So what the numbers we ran today might be completely different than the pre-approval and numbers we ran 45 days ago. Right. Yeah. Because that was prior to
the craziness.
Yeah, when the Iran situation took place, and so interest rates are probably a good 0.5% to 3/4 higher than then. So I want to stay involved in the conversation, and then when we're going to write offers, be able to have a conversation with the buyer and you, and try to structure the offer where, one, it makes sense as far as getting it accepted, and then two, it makes sense to structure their loan the best way, as far as like cash out of pocket, or are we getting some concessions to buy the rate down, things like that.
All right, so we talked a little bit about getting in the market. We've worked through fears in the market of why we should be buying right now and how it's probably the cheapest time to buy in the market. We talked a little bit about strategy. Let's talk about how we get qualified so that we can make sure we're all into this. And we've talked a little bit about qualification, but let's tap on it real fast. What actually determines what someone can afford? Like, what truly determines it?
Mainly their debt to income ratio.
Okay.
So how much income do you have that we can use? And then how much debt that you have going out as far as what's showing up on your credit report.
Gotcha.
And what, a big misconception when it comes to this is what the buyer might think they make and what they might actually make is not necessarily the same income that we can use as far as getting them qualified.
Okay.
Right. Especially with self-employed buyers.
Yeah.
Buyers that, majority are commission or bonus, huge bonus structures. Or they might have, some kind of, stock units, stuff like that, especially with the banks around here. You get a lot of that. So just having the conversation up front and making sure that what we can use is going to meet their goals.
Yeah. And then we always talk about the biggest mistake a buyer makes before they talk to a lender. But I think I know the answer to this is always going to a realtor first. But what are are there any other mistakes a buyer makes before they talk to you that you know of? That maybe if you told someone, don't make this mistake?
Well, a lot of it comes around credit, right? Credit's a big factor in whether or not we can get you approved. And a lot of people think like, oh, I have a collection, I'm going to go get that paid off real quick before I have them pull my credit. When in reality, that's really going to hurt your credit. If you've had a collection on there that's been on there for a couple years and then you go pay it off, that basically brings the last activity date to current. So that's going to kill your credit score. So before you do anything with your credit or paying off debt or anything like that, make sure to have a conversation with me. We can run scenarios, whether it makes sense to do that or not. And on the front end, like if when we pull a credit report, we see some opportunities, if you maybe pay a credit card down to another $1,000 less, that'll get you below that 50% threshold or something like that. We know that's going to boost your credit score and maybe get you into a better position with the loan terms.
Yeah. And so one of the questions I was going to ask is like, what do we do before applying for a loan? But it sounds like to me, we've answered that. Call you.
Yeah, absolutely.
Call you.
Don't do anything. Have a conversation first. We'll kind of walk through it. And this is kind of one of those things where it be honest in what you have out there, because we're going to see it. And if we know something on the front end, we have a lot more opportunity to help you fix it or get you in a better position when it comes to getting under contract or getting the application, getting the credit pulled, and making sure your credit's in the best position to do something.
Yeah, so don't live in scarcity, live in strategy when it comes to buying a home. So if you live in scarcity, you're going to wait forever and never do it. But if you live in strategy, you'll always have a plan to find a way forward. That makes total sense.
Yeah.
So we talked a little bit about the market. We got you into reality that it's not so bad today. We've talked a little bit about market affordability and how it's really affordable more than it's ever been in years. And we talked a little bit about the qualifying strategies to help people get into understanding. We've said, don't use your scarcity mindset about what's in your account, what the account looks like, and moving forward is always more important to have a conversation first before you make decisions that you may think are the right decision, but you as a knowledge expert will be able to give you better strategies around before you go making moves. The last thing we'll talk about is a couple little rapid fire questions I always like to throw out at the end. So silly one, but we all know, buy now or wait.
I'll say buy now, but that depends.
It depends.
You got to be ready, right? The numbers have to make sense. It's got to fit within your budget. So I will say buy now, but if you're not ready,
it's okay to wait.
It's okay to wait.
But come with strategy.
Yeah.
Yeah, that makes sense. Fixed rate or ARM?
Fixed.
All right, that one's easy. Refinancing strategy, when does that really make sense?
Same kind of thing when the numbers make sense. Like, if it's your property you're planning on holding for a long period of time, and we'll run the numbers to see when your break even point is, how much money you're saving versus how much it's costing on the refinance. And if the numbers make sense, then do it.
So call an agent first. Call you first.
Call me.
A lender partner.
Call me. Let's run the numbers. Yeah. If you're planning, if you think you want to refinance just because rates are low, but you're planning on selling the property in 12 months, probably doesn't make sense.
Cool. One small credit score hack people should know.
I think we kind of touched on that, but definitely getting your revolving debt below certain thresholds, 50, 30, 10. If you can just get it under those thresholds, you'll see your credit score jump.
And one last biggest myth about mortgages.
You have to have 20% to buy a house.
Cool. Well, y'all, I hope you've enjoyed Adam. It's been the A Squared team. This is one of my best friends in real estate, y'all. And 10 years of experience in it. You've seen every market. You've seen everything anyone could deal with when it comes to loan applications. You've even helped me as a 1099 employee buy my first house. You've got experience in everything possible. I hope the episode today really brought you something new. I'm Adam Sellers with the Queen City Sellers team, and this is another episode of Behind the Key with Adam Kelly from Movement Mortgage. Adam, lastly but finally, how does someone get a hold of you if they need to do that strategy session so that they can get with you to figure out if now is the right time?
Yeah, you can always look me up on socials, Adam Kelly, Movement Mortgage. But Adam will have my information. Please give me a phone call, shoot me a text, get together, and let's make a strategy session to put you in a house.
And y'all, one of the number one things I'd like to leave you with is go to a lender first. We don't care if you come to the realtor second. We'd love for you to talk to a lender first. Thank you again for joining my episode of Behind the Key.